Thanks for joining us for today's episode of The Capitalist Investor. Once again, you got Mark and Diamond Hands D.
Mark, what's going on, man?
What's up, buddy? I missed you last week.
I know. It's good to be back.
Tony did a terrible job.
What, you
Terrible. Dude, I said Diamond Hands D wasn't here, and he's like, Diamond Hands? I'm like, obviously you don't listen to the show. Why do we even have you here? But no, he did okay.
It's nice to know we can talk bad about him and he won't listen.
Exactly. All right, man. So for today's show, we're going to talk about activist investing.
Yep.
So you pulled up a list of, I think, 13 stocks that activist investors are currently buying that we'll kind of go through and we'll talk about each of them. But let's start off by just kind of briefly talking about what activist investing is. So whenever I think activist investing, the first dude that comes to mind is Carl Icahn.
Yep.
He's just a badass dude. You really don't want that guy investing in your company.
No, it's a bad sign for you if you're the CEO and Carl Icahn.
You know he's going to come in and he's going to turn the world upside down.
Yep, for sure.
Right? And he's not going to be very polite and nice about it.
Mm-hmm. Yep.
But that's activist investing, right?
Right.
You know, you come in, you pressure management, you try to get a board seat or a few of them. You do that by buying enough shares in the company, right?
Yep. And, I thought this was an interesting topic because, you hear that term out there a lot, activist investing, activist investor. You hear it a lot on TV, in between the Mark Tepper spots, right?
Yeah.
You're on there a lot. So, I thought it would be a worthwhile exercise to kind of walk our listeners through exactly what that is. Because it can be a buying signal in some opportunity, in some cases, I should say.
Yep.
So, it's always good to, if you're out there investing on your own, it's a good kind of item to listen for in the news.
Yep.
If these big power players are buying into a specific company.
Yeah. So I don't know if this name is on the list. I'm just going to jump to one that we have owned in our portfolio.
Yep.
Cloudera.
Mm-hmm.
So we bought Cloudera before Carl Icahn got into it.
Right.
And then Carl Icahn jumped in as an activist investor. And I can tell you that we as a firm felt a hell of a lot more comfortable owning that stock where it was at after he got in after us.
Yep, for sure.
Right? It's like, all right, man, this dude's going to make sure that this company is on the up and up, right? And that's typically what the activist investors do. They notice some sort of an issue with the company, and they have a solution.
Right.
And then they need to flex their muscles and make sure that solution is implemented.
Yep, absolutely.
Right.
And it is kind of similar because, us as a firm, we've been looking into a lot more alternative investments. So, this, the idea of activist investing, happens with publicly traded companies. But it's not too dissimilar to like a private equity firm coming in and buying a distressed company, right? That's kind of what they do.
Yep.
They're out there, they're looking for good ideas, maybe good, revenue streams for these private companies. And their idea is to get in there, buy it. They know it's distressed and essentially fix it, right? They're trying to turn it around, whether it's a new management team or more efficiencies, and they take what they've learned from their old deals and their old companies that they've worked with, and apply that to the current situation.
Right. Like a turnaround.
Yep.
Right. Mm-hmm. All right. So let's run through the list, man.
All right.
All right. So number one on our list is a local company, First Energy.
Yep.
Stock's been kind of brutal, hasn't done that well recently. It looks like Carl Icahn stepped in. So he bought 3%.
Yep.
Okay.
And talking about the flexing of the muscles, it looks like he got 2 seats on the board as well.
It's probably typical for Icahn.
Yep.
There's no way he's just taking one.
Yeah, for sure.
Right.
I think 3 is usually their target.
Yeah.
But, so First Energy, I guess it's up about 20 to 25% year to date. The 20.66 I have is about a week and a half old now. But
now, it was brutalized last year, though.
Oh, yeah.
Yeah.
Yep. So, we have 13 companies to talk about, so we're just going to give them a quick thumbs up or thumbs down. I'm just not a huge fan in general of the companies that are paying out like abnormally large dividends to kind of attract investors.
Yeah, I don't know what their payout ratio is, but I bet you it's like 90-ish%, I would think.
Yeah.
Right?
Something like that. So, First Energy is going to get a thumbs down from me, I think, in this particular spot.
I just don't like utilities at all.
Yeah, I'm with you there.
I mean, I understand they need to be a part of your diversified portfolio, right? But they're just boring stocks. They really don't do much.
Yep.
We're in our early 40s, right? So we don't need to access our capital in 2 years or 5 years. So, we've got enough time where I don't have to own a utility if I don't want to.
Right. Yep.
Now, for our clients who are pre-retirees, who are 60 years old, they got to own some utilities because those are defensive stocks that come in handy should the market correct right before you're about to retire.
Right, for sure. Yep.
All right, next up is Intel. Stock is on the verge of extinction. I mean, AMD has been eating their lunch for years, stealing market share from them. I don't even know, off the top of my head, man, I don't know the processors, but I want to say Intel's like 2 generations of processors behind AMD. I don't know if it's like 7 nano versus 3 nano. I don't even know that stuff. I just know they're like 2 generations of processors behind.
Right.
I don't know how you catch up unless you maybe go out and acquire. I mean, it's tough for them to play catch up.
Yeah,
but it is a big company. It's a well-established company, and it looks like Dan Loeb got involved.
Yep.
Okay.
It is a perfect, is pretty much a perfect opportunity for an activist investor to come in and try to turn it around because it is a huge name.
But the bones are in place, right? All you need to do is figure out how to dress it up a little bit.
Yep. But my concern with this particular stock is what you just mentioned, the catch-up time. Like, how long is it going to take to become that major power again?
Yeah.
And I don't know if you need to get in now to catch, a lot of that potential upside of the trade.
I don't know how much cash they have on their balance sheet, but it really surprises me that, they didn't go out and make a bid on Xilinx or something.
Right.
Some other semiconductor company that could have given them a niche, something, a differentiator.
Exactly.
Because Xilinx is like all programmable chips. And I forget, I think it's AMD that's in the process of merging with or buying Xilinx.
Yep. Yes, you're right.
Yeah. And AMD is just, they're the real deal right now.
Yeah, absolutely.
So Intel just allowed AMD to get stronger while they sat on their hands and did nothing.
Which is very strange. I don't understand it.
Okay. So are you going to go thumbs up or thumbs down on that one?
I'm gonna go thumbs down.
I'm going to go thumbs up on that one.
Oh, look at that. I like that.
I think there's I think the bones are in place, like I said. The opportunity's there. I don't know how you create innovation. I think you need to buy innovation. So I think the best path for them is probably to go and buy a small chip maker, someone that's great in AI or something like that. One of the areas where they're lacking.
Yeah. Hey, maybe Mark Tepper, the next activist investor, right? Get in there with your turnaround story.
Yeah, what am I going to buy? 1/1,000,000% of a company? I don't have the bucks for that, dude. I wish I did. Kohl's. So we got our department store.
Right.
I would assume that, all these department stores have been struggling, right? As people have shifted away from going to malls towards buying stuff online. Kohl's, one of the interesting thing about Kohl's, though, D, is they started doing this, and I don't know if it's at every location yet, but they started doing Amazon returns. Did you hear about that?
I've actually made an Amazon return at a Kohl's.
Okay, so what a cool concept to get people to come into your store. So you've done it. was the return station all the way in the back of the store?
Yes.
There you go. Perfect.
Yeah, absolutely.
Right? I mean, when Amazon is killing you, why not use Amazon to get people into your store? I actually really love that idea.
Absolutely.
That, to me, gave them, from an investment standpoint, an advantage over like Macy's and the rest of the department stores.
Yep.
Even though I don't, Kohl's, when I think of Kohl's, I think of like almost off-brand labels, maybe I'm wrong, but I remember going there as a kid and they didn't seem to have a lot of name brand stuff.
Right. No, yeah, I'm with you there. It's tough for me because I just don't know how in 20 years, all this retail is still going to be here.
Right.
That's
with everyone going to like direct to consumer.
Exactly.
Yeah, you don't need the department stores.
And I feel like over this, past 12 months, I feel like a new demographic has discovered Amazon that might, have preferred to go to Kohl's and shop there. Since the pandemic rolled around, well, we're going to just order everything offline. And now they're kind of used to that and they see how great it and simple it is. I think that also might have hurt the brick and mortar retail type stores longer term.
Oh, yeah.
But I do like Kohl's from the perspective that they're willing to try anything. That Amazon Returns is a great example.
Yep.
They're working very hard to continuously innovate.
Yep.
To stay on top. So for that, I'm going to give Kohl's a thumbs up for now. They have been ripping though as of late.
Yeah, so I was going to give them a thumbs up, and then I just read that they're up over 50% year to date. So yeah. I don't know if I can give them a thumbs up after that run. Let me take a quick peek here and figure out where they are if we go back to pre-COVID. It's not going to let me really zoom in that much. I mean, they're up substantially over the last year. Substantially.
Yep. So over the last full 12 months, well, year to date, they're up 37%. And over the past 1 year, they are up, holy smokes, 219%.
I'm going to give it a thumbs down for that reason.
Yep. So I like them as a corporation, but I think this is a good exercise in knowing the valuation. So I probably would not be buying into Kohl's at this level.
The last time they were priced at this level looks like, and I'm just ballparking this off a graph, so I might be wrong, but for like fall of 2018. And Amazon and direct to consumer continued to become more and more popular since that time. So, I don't know. Look, I think conceptually I like it. I just don't think I'd be getting on board after this run up.
Yep.
Maybe had I gotten in on January 1st, I'd be a very happy man right now.
Yep. And, I think a big part of this recent run up has been, the activist investor getting involved.
That, and it's also one of those reopening trade stories,
sure.
Which I just talked about on TV. Stu asked me, are we underestimating this economic reopening? And I'm like, dude, I think we might be overestimating it. Like, you look at all these stocks, a lot of them are trading at all-time highs.
Right.
Above their pre-COVID levels. Mm-hmm. It's tough to find any reopening stocks that are like where there's still room for them to run after hitting a few catalysts.
Yep, you're exactly right.
So, all right, next up is Exxon Mobil. So, oil and gas is obviously tough, especially with this administration in place.
Yep.
Right? Wow, there's more than 135 activist investors.
Oh, yes.
Wow.
So Exxon
out of San Francisco
is probably the biggest so maybe we back up a little bit. So, basically being in this business, most of my clients have, when they were potential clients, they walked in the door with GE stock and Exxon Mobil stock. Basically everyone had it. A lot of people it was inherited, and some of it in stock certificate form. Everyone seems to have those two stocks. So, Exxon had been taking a pounding heading into this year. And then we elect a green president, and it runs up, I think, almost 50%. So it's a volatile stock, but these activist investors are all over Exxon to basically change their business model for the next century, right? Which is, Exxon Mobil getting away from fossil fuels, which seems difficult to execute.
It seems very difficult to execute, but it seems like the country's going to go that way anyways.
Right.
So the fact that they're trying to get out in front of it and become, I guess, more green energy, if you want to call it that, is probably a good idea, man. And I looked up Exxon a couple months ago, and I want to say they're already doing a lot of that stuff. Yeah, I never really thought they were already involved, but it seems like they're already starting to do that stuff. So more power to them. They used to be the biggest company in the S&P 500. Now they're $250 billion. Where does that rank them? 40th? They're down a little bit, right?
Yep, for sure. So I'm a thumbs down on Exxon. It's up 42% year to date as of around May 26.
It's got a 5.9% dividend yield. That's not bad. I'm going to say no as well. I like Diamondback Energy. That's my energy play. FANG.
All right, Bausch Health.
That's like contact solution.
Yeah, it is.
Back when I used to wear contacts. All right, so Carl Icahn got in, succeeded in getting 2 new directors on the board in February after he unveiled a 7.8% stake. So that's a pretty big.
That's a big stake.
That's a big stake, dude.
Yep.
But they had already announced plans to spin off their eye care business, Bausch and Lomb. All right, well, that's really all I knew them for. Yeah, I mean, I just said that was contact solution, right? Interesting. So, this is formerly Valiant Pharmaceuticals. Okay. What's your take on this one?
So, I think it's up fairly large already, about 32% year to date, probably a little bit more now. I like this as an example of why you could buy into a company just based on a person like Carl Icahn. Because you can already see the machine at work, if you will. Coming in and getting a company more precise in what they do and more efficient. So, I know they knocked out a bunch of some of their outstanding debt. So, just on the space and Carl Icahn, I would be a thumbs up on this one.
Okay. I think I would give it a thumbs up too. All right. What is this, like Dannon yogurt?
Yeah.
Interesting. People aren't eating yogurt anymore? What's going on here?
Apparently not.
Yeah. Okay.
So this one has been this is another kind of classic turnaround story, right? A name brand that everyone recognizes that's basically started losing money. So the who got into this one here? Artisan Partners and Bluebell Capital Partners, in a move basically where they started selling off a few pieces of Dannon. It kind of turned the stock around, at least in 2021. The problem with this one is it's still trading over the counter. So probably not a...
How are you trading over the counter at $46 billion of market cap? That's crazy.
Yeah.
Isn't it?
It really is. I was surprised to see that.
Yeah. So, I mean, if it's trading over the counter, I mean, you would think getting it uplisted to one of the exchanges is a catalyst to take the stock higher.
Right.
I view so over-the-counter stocks they're weird, man. Like you can't even buy them on Robinhood.
Right.
Right. So a lot of like the cannabis plays are over the counter, right? As soon as those get uplisted, they're going to re-rate higher.
Right.
So maybe that's an opportunity, right? I mean, some people might look at it as it being risky since it's over the counter. I would actually view that as potentially an opportunity. I mean, if they've got some good activist investors trying to get that thing just on the NASDAQ or the New York Stock Exchange seems to be like a no-brainer at a $46 billion market cap.
Absolutely.
I'm going to give that one a thumbs up because I do like yogurt. All right. Elanco Animal Health. All right. So vaccines, wormers, and flea protection products for pets and farm animals. So we own Zoetis. I don't have a comparison between the two, but Zoetis has been a very, very solid stock to own. Very solid. They're in both the companion animal market and also livestock as well, right? So these guys, same thing, pets and farm animals, sounds like a lot of the same products. It was spun off from Eli Lilly in 2018. All right. So we just saw an activist investor hop in for $1.2 billion last year. Sachem? I have no idea how to pronounce that.
Yep, I think that's good.
Either or, yeah. They got 3 board seats. And then there's another activist, Starboard as well.
Yep.
In February. And they aimed for 3 board seats. Okay, but I guess they withdrew. So I don't know, man. I mean, I think I like this space.
Yep.
So I like the space. That's why we own Zoetis. I haven't done a side-by-side of Zoetis and Elanco. So I don't know how much to comment on the stock, but I can say I do like the space. People are willing to spend more money on their pets to take care of their pets' health than they spend on their own health,
Without question. Yep, absolutely.
So,
and now everyone has a pet after the pandemic.
Yeah. So I don't know enough about the company, D, but I'm going to say a thumbs up on the space.
Yep. I'm in the same way. I actually had undecided written on this one because I'm kind of in the same boat.
Yeah.
I do like the space, but just looking at the chart, it's been a pretty bumpy ride so far. So I think the activists may have a little bit more work to do on this one, but it could be a potential, good entry point if they do get it turned around.
Yep.
So I'm going to stay undecided on this one, and we'll see how it goes.
All right. Forward Air. So these guys, it's like expedited freight delivery services. So it seems like the issue is they've been making some pretty boneheaded acquisitions that have diversified the company away from what they do best.
Right. Absolutely.
Right? So that's the issue. It's like, why'd you guys make all these stupid acquisitions? Stay in your lane, bro. Right? That's, I think, the best way to summarize this one. So what's going on here? It looks like Ancora Holdings holds 6.3%. They initiated a proxy fight to get 4 board seats. All right, so it looks like that's working.
Yep.
Because now Forward Air has started to sell off some of its ancillary businesses.
Yep.
Like, all right, so Forward Air, they're in the air freight delivery business, and they sold off their pool supplies business.
Yep.
What the heck? What's going on there? Why are you in that business?
For $20 million too. That seems like a small amount.
A company worth $2.6 billion. Why are you messing around with a $20 million acquisition in the first place?
Yep. So that's exactly why an activist investor would get involved in something like this.
So the activist investors coming in, they're flexing their muscles and they're saying, stay in your lane. We're going to get rid of all these ancillary businesses and we're going to use the proceeds to get better at what we do best.
Right.
I like that.
I agree.
I mean, that's something that we always work on doing as a small company, right? Like, can't get distracted by too many opportunities. You need to put your blinders on and do what you do best.
Yep. So it was up about 25% year to date, but I had written down, hard not to be a fan of the moves that they've made so far. So I'm going to give it a thumbs up.
Okay. Delek, ticker DK, small company, less than $2 billion. Carl Icahn got 15% of the shares in 2020. It sounds like he's got a plan for these guys.
Yes.
So they own 4 oil refineries in the Southwest. Okay. And let's see, pipelines, which have been under pressure. So I wonder what his goal is here. I wonder what he's trying to do.
So I think he's coming. So the headline is, the CEO was making $81 million over 8 years. So I think this was a target of Icahn to come in and kind of streamline everything. He got the 3 board seats that you mentioned, and that's pretty much all you need in the investing world. They're up 58% year to date. I think it's a few points lower now. But, it's still a buy rating out there for a lot of the analysts that I see. But after a 58% run up and in its pretty tough space, I'm not so sure I'd be running out to buy this one. But you can't ignore.
I don't know if I'd want to buy a distressed energy company.
Yeah.
Like, I'll buy best of breed in energy, but I don't know if I want to buy a turnaround.
Yeah,
company.
That's a great point.
All right, thumbs down. Prudential Insurance, guys. How can you screw up insurance? Pretty simple, dude.
You would think, yeah.
Right? So life and health insurance, and obviously annuities, but Prudential also, they have gotten into the wealth management business as well.
Mm-hmm.
Probably haven't done a great job at it. I started off, when I started my career in financial services, I started off at a couple of these big insurance companies who pretended like they were in the wealth management business.
Right. Mm-hmm.
They weren't, and it was actually frowned upon if you did any of that business. They wanted you to go out and slang insurance as much as you could.
Right.
So third point is the activist investor here. They think they could be stronger. They're recommending that the company separates its faster-growing Asian unit from its U.S. business. Okay.
And also planning to spin off Jackson Financial, which I believe is that annuity and probably mainly variable annuity arm.
Yep. Okay. I don't know, man. I mean, we know insurance pretty well. What do you think about this play? This is strictly a geographic play.
Mm-hmm.
Strictly a geographic turnaround story, right?
Yep.
You're going to spin off the more profitable countries, and we're going to leave the slower growth countries as is.
Right.
That doesn't do it for me.
No, it's not really getting me too excited. Quite honestly.
There's not enough of there's no one coming in and saying, hey, insurance is slow growth, but fee-based wealth management is where it's at.
Right.
Like, I'm not seeing that here. And I know Prudential, they're in the business, but they're not a big name in the business.
Yep.
It's ancillary for them.
I agree. This is probably, when you mentioned best of breeds a couple picks ago. Yeah, probably a better to allocate your money somewhere else than to in that space if you like that space.
Yeah, and insurance is a good space.
Yeah,
nice defensive place for your money.
Mm-hmm.
Gets you financial exposure without having to own a bank.
Mm-hmm.
So. I think Pru's a little weak on the investment side of things.
Yep.
ACI Worldwide, so they sell software that facilitates electronic payments to banks, merchants, and other customers. Who needs any of that when you're paying for stuff with Bitcoin?
Right. Have you ever paid for anything in Bitcoin?
No. No.
We'll get to that on our NFT
just
show.
those things I buy on the black market. We're not going to talk about that. All right. So is that even interesting?
It's not really interesting.
No, it's really not. Because, I mean, the whole allure of crypto is it kind of cuts all this stuff out.
Right.
So, all right. So Starboard came in. They've boosted the share price 54% since last September. What are they doing with this company? Explore value-enhancing options that include a potential sale of the business. Probably a good idea to get out while you can. It just seems very old school, dude.
Yep.
The world is headed in a different direction. I understand you need software. When you go and you pay for something with Apple Pay on your iPhone.
Right.
There's still software behind that, so that software is not going away. But there is something to be said about there's more peer-to-peer payments now, right? Like you look at Venmo and Cash App and people even pay for goods and services sometimes that way as well. Yep. So I don't know. Not that interesting for me. I'd pass on that one. Thumbs down.
Agree.
Xerox. Dude, when's the last time these guys innovated?
This was kind of one of my favorite ones on the list because, I hadn't thought about Xerox in a long time.
Did it remind you of the movie Office Space?
Yeah, exactly. It did.
Did it? What was it? PC Load Letter?
Yeah.
There's beating the crap out of the copier.
Yeah, just taking the baseball bat to the copy.
Oh, God. What a great movie.
It really was.
Fantastic movie. I think that was an independent film. Did you know that?
Yeah, it was. Mm-hmm.
Wow. It's got to be like the best independent film ever. I can't think of
a better one.
All right, so it wins the award. All right, so Carl Icahn. Carl Icahn, he has a tendency to hop into these he's also probably 80 years old.
Yep.
So maybe he's got that Buffett mentality where he gets into stuff he knows and understands.
Right.
Right?
I think that is exactly right on this one. Yeah,
right.
absolutely.
I mean, which is interesting that he got into Cloudera because that's technology, right? But so Xerox here, honestly, man, I don't even know what they do. So they've got software financing. Let's see, they're going to reorganize the company into 3 businesses: software, financing, and innovation, each with its own management team. I don't think they innovate. I mean, we get a new copier every few years here. Mm-hmm. Are any of them that better than the
no, they
previous
all stink.
one? They all stink. I hate them all.
They all seem to get worse.
I don't understand. Like every time I try and print something, it wants me to go and
PC
load
load
something in the manual feeder.
Yeah.
But why does it have to go in the manual feeder? What's wrong with tray 1, 2, 3,
There's
4,
like
5?
6 trays.
Oh, come on. I don't like copiers. Crazy.
My quick take on this one is it's a name that everyone knows, so I think it would be a name that older activist investors would gravitate towards. But what the heck are you going to do with it at this point?
Well, so when I think of Xerox, I think of copiers. Mm-hmm. Is that what you think of?
Yes.
They probably do a lot more than that. Mm-hmm. But I don't know what else they do.
Right.
Because every time I think of them, I just think of copiers.
Mm-hmm.
And when I think of copiers, I think of a society with lots of paper.
Right.
And I know we are all going more and more paperless. Mm-hmm. So for me, it's a no.
Yep.
For those reasons. I felt like one of the sharks on Shark Tank.
For me, it's going to be a no.
Yeah.
And for that reason, I'm out.
All right. Cubic. What do they make? Rubik's Cubes? Market value of $2.4 billion.
Subway system collect fares in military managed weapons systems. Some diversification right there for you.
Okay. So Elliott Management got involved, 15% stake last September, and they indicated an interest in buying the company outright. But Cubic rejected the offer? Okay. What's your take on Subway payments?
It seems like something that's not going to go away anytime soon. It seems like a steady revenue stream. But I don't know if you're looking for the next growth stories. I don't know how it's going to come from subway collection systems.
Yeah, I mean, look, I used to spend a lot of time in New York, so I was starting to figure out the subway system. I've completely forgotten how it works at this point because it's been so long. But, you got to get like a ticket and you preload it with dollars.
Right.
And I can't believe they're still doing that. Like, why do you not have a QR code on your phone or something? Like, so there's certainly an opportunity to upgrade all of that stuff, right?
Yep.
So, look, I don't know if the valuation's rich or not, but I think that stuff's ancient. It's archaic. There's probably an opportunity there.
Yep. That makes sense.
But that also, how much are you going to invest? Has New York City rebounded? Are there, I don't know. I mean, is everyone living in New York City again where you have subways?
I don't know. I don't know if people are moving back. It seemed like a lot of people moved away from they
moved
heavy,
into like the suburbs of New Jersey and Connecticut and stuff like that. But I think you need the people back so that it makes it worth it for you to upgrade your machines and your software and all that stuff.
Yep, for sure.
All right, so it's thumbs up or thumbs down on that one?
I enjoyed the story. I don't know when it's going to get that next big bump up, though. So for that, I'm going to give it a thumbs down.
For that reason, I am out. So I don't see that. But who knows, man? I mean, New York City could reopen faster than anyone is really giving them credit for. I hope they do, because it was really a fun city, lots of energy. But I think it's too big of an unknown for me at this point. Anything subway related, until people are comfortable standing on top of each other with no masks, I think I'm just going to stay out of that, out of those kind of investment options.
Yep.
Good stuff, dude. Some of these stocks I had never heard of before. Others are household names. So as always, thanks for joining us. Shoot us an email with any questions at info@swpconnect.com. Check out the YouTube channel. Show notes, all that stuff. Give us a 5-star review. Email us a screenshot at info@swpconnect.com. And we will send you some swag. I mentioned this a couple weeks ago. We have to upgrade our swag. We need some summertime swag.
Yep.
Got to get some golf shirts or something like that. And then roll the hoodies back out in the fall.
I do love the hoodies, though.
The hoodies are the best. My son was wearing a hoodie at my daughter's baseball game the other day. It was 83 degrees outside. So I guess you can wear them whenever you want. By the way, hit that subscribe button. Make sure you subscribe and make sure you tune in every single week. Tell your friends about us. We obviously want as many people listening as possible. As always, thanks for being with us, and we'll see you next week.
The opinions expressed in the podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any investment, legal, financial, or tax strategy. It is only intended to provide education about the financial industry. Please consult a qualified professional about your individual needs.